Welcome to another episode of Building Prosperity with Commercial Real Estate. I'm your host, Gary Tsungu, and today we have John Pugh. Thank you for being on the show, John.
Thanks for having me, Gary.
John has over 20 years of experience in the investment and real estate space. He has developed over 2 million square feet of mixed-use commercial and industrial space. He is an expert on family office, real estate development, and investments. John's firm, Pugh Management, serves as a family office real estate operating partner on real estate development and asset management assignments. Pugh selectively partners with family offices. The firm is comprised of 7 highly experienced professionals that serve 5 family offices on separate private assignments across several U.S. locations. John, welcome again, and I'm looking forward to hearing more about your business model and how you came to becoming a trusted development partner for family offices in particular. But before we do, I just want you to take me back a bit because you have an extremely interesting background. And a bit later on the show, I want to identify the bridge between your background and your current role. But I imagine, when you first sort of started off or going to school, you didn't really you weren't thinking about real estate development. So take us back and tell us a little bit more about your background and how you got into the space.
Sure thing, Gary. I'd be happy to chat about that a little bit. I grew up in the Washington, D.C. suburbs, played a lot of basketball. I'm actually 6'10", so it came kind of natural. and I was one of the top 50 players in the country coming out of high school. So I had a fair amount of options in terms of where I was going to go play, and ended up at Fordham University in New York City, which is an Atlantic 10 school, which is one of the higher divisions of Division I. Had a great experience there. Learned a heck of a lot about a lot of things in terms of teamwork and working towards a common goal, which certainly comes in handy in real estate. And then went on to play over in Australia professionally, which was also a great way to see the world. So did that, and then I got into worked on Wall Street. Majored in finance in school, and worked on Wall Street for about 5 years with program traders, algorithmic traders in the bond and bond futures space primarily, and did that for a few years. Recognized that I was really meant to be in the real estate space, really for my love of buildings. Went back to get a Master of Architecture degree at MIT, which about 3.5 years of study, and then got into architecture and fairly quickly figured out that I belonged in the real estate space, given my business background and my interests. So that was kind of the starting point for me, and then transitioned, really into the development space.
I can really tell that you must like real estate if you come from such a diverse background, and you had a lot of options by the sounds of it, right? You had basketball, you could have gone to architecture, you could have stayed on Wall Street. But given your diverse background, I think this is a fair question to ask. Did you ever think at any point, no, I don't want to pursue architecture. I sort of want to try playing basketball or remaining in the basketball industry or remaining at Wall Street? At any point, did you think, no, this is not what I want to do, and you kind of wanted to step away from real estate?
No, real estate's been something that I've always had my eye on until I finally got into the space. It's been an interest since a fairly young age. My sister's also in the real estate space, so I have some of that kind of family connection. And it's one of those things. Once you find what you're meant to be doing, which is what real estate development, real estate investment is for me. You really kind of recognize this where you're meant to be, right? I feel fortunate to have given the chance to play basketball, which was clearly something I was meant to do for a long part of my life. And so I've built up kind of this, I guess you could call it intuition about when you're in a place where you're meant to be, where you're doing what you're meant to do. And that really has been what real estate investment and development has been for me ever since I got into the space. I feel fortunate to have kind of figured that out, and it's been a heck of a lot of fun ever since.
Yeah, no, I bet. For myself, it was sort of a necessity to kind of get into real estate because of my family. My dad was a carpenter, and ever since I was a young kid, he's like, "Hey, you're coming to work with me." There's no, it's like, "Oh, I want to stay at home and play video games" or anything like that. So and I could have chosen anything else just like yourself, but I did decide to stick with it, and I'm glad I did, for sure.
It's interesting. My father also is an engineer. He designs and builds ships for the Navy, the U.S. Navy. And, when I was on Wall Street, kind of trying to figure out what I wanted to do with my life, it was, just kind of having him as a role model too, similar to you, helped me to kind of say, you know what, this could be something that I would enjoy being involved in. So that's, a little bit more perspective.
Yeah, no, that's awesome. There must be some really cool stories that your dad shared with you. We can talk about that. We can talk about that another time. But
Sure.
so tell me a little bit now. So you're in real estate. You're serious about it. What made you kind of get serious about it? And what I really want to know is a little bit about your first project, sort of the one that helped start it all.
Yeah, absolutely. I mean, I think that the first real estate development project I was involved in was referred to as the Landmark Center Development Project here in Boston, Massachusetts. It's in the Fenway area. It's a former Sears Roebuck building, catalog building for deliveries, fulfillment, that sort of thing. It was built in, I think, 1929, 1930. I was working at Samuels and Associates, which is a large mixed-use development shop here in the Boston area. The asset is 1 million square feet of existing space with a couple 100,000 square feet of retail, 650,000 square feet of office, a large parking garage. So my job, I was brought in to work and manage with one other partner, kind of the day-to-day of the design, permitting, construction, logistics, figuring out how the financing might work. So that was, taking that existing asset in an urban complex location, and effectively taking it, looking at, okay, these are some different options that might work financially and from a zoning and kind of political standpoint. And then taking that and advancing that design, advancing that permitting process, which, as you can imagine, Boston is quite challenging. And what we were actually doing was tearing down the existing garage, putting up a new retail podium, which was a couple 100,000 square feet, and then adding 425 apartments above that, and then redeveloping the existing ground floor retail, which also included a movie theater. So there was a heck of a lot involved with that. And it was, I feel very fortunate to have been involved. Samuels is just a great group of people, true professionals, and learned a heck of a lot being on that project and being involved there. So that was my first kind of foray into it. And so I didn't really dip my toe in and do a small project. It was kind of dive head first in the deep end, right?
Yeah. So that's a trial by fire kind of situation, right?
Oh,
For
yeah.
sure. What were some of the? I know that mindset plays a big role, especially when you're dealing with a big project, whether or not your first project is a big project or not. What were some of the challenges that you faced, if any? Maybe you were a natural. Maybe you just kind of like, yeah, I got this, not a problem. But what were some of the challenges that you faced with that project?
Yeah, that's a good one. Yeah, I certainly wouldn't say I was a natural. It did some of the things did come naturally. I always had a real interest in numbers and financial analysis, and being an architect, I certainly understand kind of how a building comes together. This was a very complex building that we were tearing half down and building kind of above. So there was a lot of construction logistics and design, gymnastics that were necessary to kind of figure out with a very, very talented design and construction team. And so I would say the biggest learning piece for me was just understanding kind of my role. In that role, I was a development manager. In my role of kind of leading the team, working with people that basically knew more than I did about this very complex process, leading that team, leading the personalities on that team, and making sure that the whole group was moving forward in a efficient manner and keeping everybody kind of on board with the direction we were going in. And those were some real challenges. I can't say I certainly wasn't perfect along the way, because a big part of it was me, kind of learning as we went. But like I said, I got a heck of a lot out of it and met some great people, and really had the opportunity to learn from some of those snafus. I think, one example is, we'd have 30 people in a conference room. I'm leading the conversation, and we've got a civil engineer, or we've got a structural engineer, and he's saying, oh, well, you can't do that. That doesn't make any sense. Right. And then you're trying to kind of work around, okay, well, let's talk and think about it, as opposed to just saying this doesn't work. Right. Mm-hmm. So there's a lot of this kind of problem solving as a group. that can be challenging, especially for someone, you know, who's kind of learning as they go. So that was a big challenge for me. And I couldn't say more positive things about, you know, what I learned on that project, and the great professionals I was honored to be on the team with. So.
Yeah, no, that's great. And it's sort of a blessing and an advantage to go through that experience, to kind of go through as much as possible, as early as possible. And I mean, I could definitely relate with trying to get everybody on the same page. Unfortunately, I played a little bit of rugby in high school, so I understand how important it is for everybody to work as a unit. Otherwise, you're not just going to lose, you're going to get hurt. Like, you're going to get really, really hurt. So even now, just to kind of get everybody on the same page, one person will say, well, I don't see what the problem is. It's like, yeah, but this is an issue. It's like, you know what, I'm going to take the civil engineer's word for it, because, you know, he learned a lot about this, and like, this is not my forte. So it's really, really important to have not only experienced people, but to work with people that you really, really trust in order to be able to take their word for it. So it sounds like your background in basketball really did play a role in sort of managing that another team, which is essentially right. It's like,
it's a great way. That's a great connection. Absolutely, Gary. It was, you know, we had people. It was such a great diverse group of individuals we had on our team, especially in college. We had people from Russia. We had people from the Bronx. We had people from suburban Virginia, like myself. We had people from Massachusetts, and just a whole lot of different personalities, a lot of different agendas, different egos, different people. People are, you know, on a team. Everyone needs to play a role, and so that was, I mean, just a fantastic experience for me, because, you know, I learned that you can not necessarily be in love with your teammate, but you can also find common ground to work together and solve problems together and move things forward, right, towards a common goal. And that's, I mean, I feel very fortunate and blessed to have had that experience, like you said, because, I mean, I know that we can do that, and I can be a part of that success in bringing people together. And I think that, you know, that's probably one of my stronger suits, is that I actively look for ways to relate to people and find, you know, positive things where, you know, you could easily go in another direction. And I think when you're working with a team, trying to lead a team, that's a pretty important piece. So.
Yeah, it's not enough to, you know, to have the knowledge and skills and experience that are going to help execute and get to your objective successfully, but it's the people skills. You know, it's something that, you know, they don't really talk to you about. Like, they tell you to work in groups growing up, and even in sports, but they don't really tell you, like, hey, this is going to be very, very, very important down the road. So let's switch gears a little bit. So you're working, and, you know, you did your first project, do a few more projects down the line. It seems like it would have come naturally for you to kind of venture off on your own, with your own firm, your own company, set up everything for yourself, and then build your own team. How was that transition? How was it from going from, you know, another firm to setting up your own venture?
It was difficult. It was very difficult. It took many years for me to work on a variety of different levels and platforms. I mean, I'll tell you, I went from working on that 1 million square foot plus project to working on a 2-family condo conversion, right? I mean, I was looking for ways to make money. You know, as an entrepreneur, you can't just say, oh, I'm only going to work on a, you know, 300 unit multifamily, you know. So I've had the opportunity to to, you know, get my butt kicked a few times, learn a few lessons, but I also been very fortunate that I was able to connect with some people that were recognized that I had a lot to bring to the table in terms of the design and development process, and were willing to kind of work with me and give me a chance as a partner. And then that has really kind of transitioned and turned into, I mean, that's where the family office niche that I've kind of developed, that's where that comes from, is that I connected with an individual who's a friend and colleague and business partner now, that his family owns a very prominent company here in New England. And he was looking to develop properties, and he didn't have some of the experience that I had and some of the financial kind of background. And we kind of naturally teamed up, and next thing you know, we're doing projects together, right? So it's also, the other thing to mention on that is also, it's a, what I've found, at least working with some of the different partners that I've connected with in family offices in particular, is it's about finding kind of shared values and principles. It's not really, hey, I've got a deal. It's not transactional, right? That's extremely superficial. I think the more you can connect with people on a deeper level, a shared kind of experience, shared values, then you can develop the relationship. But it takes many years to kind of get to know people and to be able to develop that rapport and that level of trust, which is a really important piece, because you're not just doing a transaction with somebody. As a broker, right, you could go and say, hey, I've got a property, here you go, it's sold, I'm out of here, send me my check for $200,000. That's one, and that's great, that works. But in the business that I'm in, it's the trust piece is really important, that relationship is really important, and I enjoy that. I think it's fun, and I like having a few very deep relationships as opposed to many kind of more shallow ones. So it's been great.
Yeah, I couldn't agree more. And I wrote a small piece about how crucial relationships are when it comes to working with people in general, not just raising capital and not just going out and asking for money, but it's a lot. That's why a lot of people say, you got to start with friends and family. And the reason why you got to start with friends and family money is because, well, you'd hope that these people trust you. You'd hope that these people are going to trust you with a small sum, and you kind of, you get your feet wet and you kind of prove yourself, and then you scale up slowly but surely.
Sure.
I got a reality check when I had gone to a family office summit, and there was a lot of firms there, a lot of family offices there that had the wherewithal. They definitely had the wherewithal. And I remember it was sort of, kind of a wake-up call, because I thought that if I just kind of go where the money is and present this deal, then the money will follow. And as they say, if you build it, they will come. That's not true. It's like, if they trust you, if there's a relationship, then they will come, right? And you sort of have to kind of shift your mindset to think about, to put yourself in the other person's position. And as an investor myself, I'm in that position, but you have to kind of think, hey, would I give this person money? And even the people that I work with myself, I would much rather work with somebody I've known for a while, as opposed to somebody that's sort of like, hey, I have this amazing deal, let me do it, give me the money, and I'll knock it out of the park. It's like, it's, as successful as you may be, it's sort of like, I would much rather go the other way.
And I would just add to that, I think that once you've done a few deals, that attracts more deals, more investors, more opportunities, and you see so many opportunities. If you don't really feel a connection with somebody, if you don't really feel like there's a potential for a meaningful, longer term relationship, are you going to answer the phone? I mean, maybe not. You have too many people calling you. I have too many people calling me, telling me, hey, I want to help you finance your latest deal. Like, that's great, but that's not going to. I've got 10 other people who call me tomorrow saying they want to help me finance the deal. And I don't need you help me finance the deal. I can find debt and equity pretty easily, right? So it's not about to me, it's not about the financing and not financing. It's really about the longer term value you can create for each other by supporting each other, by learning together, growing together. I think that's fun. That to me is fun. It's you're basically creating a series of these kind of smaller teams with these family offices, because you have built up credibility in relationships.
Yeah, that couldn't be more true. And it's not just about finding a source of capital that's going to finance your next project, but you also, like you said, you have to, at the very least, someone be able to have a relationship with that person or like that person, because you're going to work with that person for the duration of the project. And you're gonna be married to that person or that firm or that source for a very long time. It's like, do you really want to pick up the phone? Do you really want to get an email? Get emails first thing in the morning and late at night, and constantly do this for the next 3, 4, or 5 years?
Yeah, you nailed it exactly. Like, you're not just saying, it's not like the stock market. You're not just putting a buy order in, and then maybe 6 months and 2 years from now you're going to sell it. you're in it for the long term. You're on the phone, and if you're a co-GP, you're on the phone a lot. You're in meetings a lot together. You have to respect each other and what the value each of you brings to the table. And then if you're in the LP position, then you're still getting active updates and regular updates, reports from these people, and you're asking hard questions to these people that sometimes that they're going to have to do more work to answer. So you have to be comfortable with that person and really trust that they're telling that they're sharing with you what they should share. A friend of mine got a deal. It's a 40 or so condo deal, and he got in the deal, got connected, kind of some broker introduced him. He put a couple $100,000 in the deal. Should have been a home run. Now he's put up another $1 million, and the deal is not done yet. And you know what? They were trying to self-perform the project, completely fell on their face. He had to come in, take over the deal, bring in his own GC. And why is that situation there? It's partially because he didn't know who he was working with, right? And I think it was it's natural to want to kind of get in and get involved and do things active and there's a deal, let's go check it out. But at some point there's a certain level of prudence. You have to slow down and reassess the situation, recognize that that unless you really know the person, their background and their references, I mean, that's another thing to think about. You got to look before you jump, I guess is my point. So.
Yeah, no, absolutely. Now, on the family office side of things,
Sure.
families, individuals, investors, they all come from different walks of life. I'll give you an example. I know a family that made their money in the textile industry. So when it comes to, let's say, an opportunity where they bought some land and they want to do something with the land now, they can either sell it or develop it. They probably wouldn't know what to do. They wouldn't know what the first thing is. When it comes to development, what are some, I guess, not mistakes, but what are some things that you're seeing family offices do that they could have completely avoided, sort of like the example that you just gave earlier, had they sort of brought in a partner like yourself?
Yeah, I think that's a great question. I think one piece of that is defining what a family office is, right? There's a lot of kind of lack of clarity there. And I think the best way to think of it is it's either a family that has had a successful business for many years and they've amassed enough wealth that they have an formal office that manages their money and their investments, or a more informal situation, which is either an ultra high net worth individual or a family that has a portfolio of investments, right? And so that's typically kind of in the 50 million plus of investable assets. That's kind of where, I think the definition begins and ends. So that's one piece. And then to answer your question, some of the common mistakes are, an individual or family ends up with a piece of property. It's kind of laying fallow because it's in the back of the portfolio. There's no cash flow coming in from it or a limited amount of cash flow. It's not a priority to look at or to deal with. And that is just kind of a missed opportunity, right? And so, don't get me wrong, that piece of property may be land banked for a very specific reason, but it also may be forgotten about, which is fairly common with groups and families that own large amounts of land. So that's one issue that I've seen many times. The other issue is that families get into a situation where they're, I'm thinking about developing this property in a way, but they don't necessarily have the right team, right? And so that to me is always a big piece, right? Do you have a team, or do you know the right people to bring in for the team? Like just outlining in general, what is the right team for a project, like you're contemplating. You have to understand who are the right people to call, who are the right attorneys to call, who are the right engineers to call, who's the right construction company to call. So there's a lot of these relationships and this knowledge that really only comes from experience. And so if I've seen families, they either buy a piece of property, have a piece of property, say, I'm going to develop it. They go down the road of permitting the property. Okay, I'm going to do. Here's a very common thing that I've seen a million times in the Boston suburbs, right? people have a nice piece of property. It's right next to a train station. It's really well located for mixed use, maybe for multifamily, transit oriented. And they're in a town maybe that's, you know, kind of middle class to maybe a little more working class. And the rents just aren't high enough to justify building stick construction, you know, lumber construction, 2x4, 2x6 construction over a podium, over a steel podium. Very common here in the Boston area. And they design it so there's structured parking with this podium, the steel podium, concrete podium. And then they get all the way through the permits. They spent, you know, $300,000-$400,000 on the design and all the permits and a lot of time and stress and anxiety. And then they go to build it and oops, it costs too much, right? And so that's just it's a shame because I can't tell you how many people I've talked to. Oh, I've got this property is for sale, and oh, we can build it at $125 a square foot, and you know I know it costs $220 a square foot to build that, and they're relying on their friend who was a contractor 10 years ago, or he's a guy that you know that builds houses and he doesn't have the knowledge or the relationships with the subcontractors to be able to adequately or accurately price a construction project at that scale, right? So that's those are just some of the common kind of pitfalls. Another one is there's a group that we've worked with in the past and we've had conversations with about projects, and you know they send us, hey, we've got these great projects here, we're looking to develop them. And they've only ever owned, for example, existing multifamily. They've done some value add, things like that. But value add development is extremely different from ground up, right? The risk profile is completely different. The investors are completely different. Not to mention the construction costs, the upfront costs for permitting, the risk that you take on through the approvals process, understanding the zoning, all the legal implications. There's a lot of upfront risk, and making that jump is not necessarily an easy jump to make. So the idea, oh, okay, well, you know, we can just figure it out. As much as I like just figuring things out, sometimes I can certainly relate to that. When you get to a certain scale for projects, real estate development projects, it's very dangerous. And so that's where Pugh Management, myself, that's where we can come in and advise and help and partner with families and help them kind of figure some of those, the highest and best use, and the options, and some of the different risks that might be exposing themselves to if they really decide to get into that process. So,
no, you made a very good point in terms of what in regards to conventional knowledge versus unconventional knowledge. So they may get an opinion, or they may get some advice from a family friend or somebody that they worked with in the past. And they'll say, and I've been in that situation where someone said, hey, this is a great project. We can do it. We can build it for $175 a square foot. That sounds nice. At the end of the day, it sounds really nice. Everybody wants to save money or make money, whatever the objective may be, in order to successfully get the project or to successfully get the returns that your investors are expecting. You know, try to meet and achieve that IRR for your investors. But the reality is, like, I've had our capital sources and our equity partners who asked, okay, well, who provided this quote? Like, who put this together? It's like, and when you tell them, well, the company has over 42 years as a general contractor, they know the area, they know all the trades, they know everybody. That is when you can sort of help sell the project and have confidence in the numbers. But to kind of go off the cuff and be like, oh yeah, we can do this for 175 square foot. It's like, what makes you say that? It's a far cry from reality, as opposed to.
And frankly, it's dangerous. It's hazardous for the investors. It's hazardous for the family office, and I think it's unfortunately, at least from what I've observed, the institutional space, there's a very strict discipline. We're only going to work with these very experienced kind of groups, and they have to have done 100 multifamily projects, in this area. And the family office space, I think there's an interest in building out their direct private investment in real estate. And I think sometimes, unfortunately, they may be taking on more risk because they're trying these things that they're not necessarily sure that they should be doing, or they're not even aware that they shouldn't be considering. And that's the danger of kind of getting into this without having the right advisor, the right group. And like you said, it comes down to the team, and do you have kind of that credible information source, especially for, I mean, when it comes down to it, you know, I can tell you that it's going to cost $500,000 for architecture and engineering on a $20 million project. But, you know, I couldn't tell you off the top of my head in Toronto that it's going to cost, you know, $200 a square foot or $150 a square foot. I'd have to figure out who the builders are in that area and have some conversations, share some basic drawings and you know, site information for them to give me a real number, right? And so anybody that says, oh, it's this, the build, but you know, they're making it up unless they're building next door the exact same product, right? And so that's just something to be careful about. So
yeah, it's a great point. And to your point, just recently dealt with that, just recently experienced it, where it was a recommended, highly recommended general contractor. They had done a lot of work, and the quote came back at $225 a square foot. And I spoke to another general contractor who had 2 projects in the city, and one of those projects was a four building community, you know, sort of a cluster of buildings. And all the trades were local. Everybody was local. Everybody was already here, and it was $285 a square foot. And I was like, how's that discrepancy? And it's like, and I asked them, I said, you guys are on the other side. You guys are about 45 minutes away from the city, from Kitchener. The project was in Kitchener, which is about an hour and 15 minutes west of Toronto. And it's like, how do you guys get that? It's like, oh, we have confidence that we can do it for 220. It's like, okay, I would, and you know, it's like,
I'm glad you do. That's not helping investors,
right, exactly. That's exactly it. And I have a fiduciary duty, you know, to protect everybody that's involved.
Exactly.
And I would much rather pay a premium, to be honest with you, and to get that guarantee and the peace of mind, as opposed to kind of save a little here and there. So yeah, and it can be dangerous, 100%.
Yeah. And the other thing is that contractors will say one thing, and then it turns out costing something else. And at that point, you've spent a bunch of money. You've gotten into the deal. You've gotten the land tied up, or you own it. Like that could be they're basically setting you up, putting you in a pretty tough place, right? So that's the real risk. And without some level of experience and kind of credibility, like here's an example, right? I was looking at a quote the other day, right, for some site work. It was on 6 acre property, right? And we just did a project, and it cost about $2 million to do 6 acres worth of site work. Not that different scope. And this number came in, it was 2.4 million, right? And I said, oh, that's interesting. It seems a little high, you know, whatever. This other quote, we get another second quote, then comes in at 1.7. And so I'm saying to myself, well, 2 million seems right. 2.4 seems high. 1.7 seems low. So in the end, you know, I'm talking to the guy who showed us the 2.4 quote, and he's the general contractor. And it's like, you know, I think you might have to talk to some more subs, because your price is a fair amount higher than this other price, and really what I was expecting. And that's the kind of thing where you can't just kind of wing that, right? You have to have somebody who's either, you know, like myself, who's got relationship and experience in that space, where you have to have a owner's rep that has experience in that construction in that space, right? That has can provide some of that perspective, in addition to understanding all the other development pieces and you know, everything else that goes with development. So
yeah, no, 100%. You know, you're a crucial part. You're a crucial part. An experienced partner is going to save you money at the end, because they can just look at a price and be like, okay, seems a bit expensive, and it's not going to be as profitable as we thought, but it's okay. And you know, if they're inexperienced, then they don't know either that they're paying too much or they're not paying enough. So in regards to getting involved with the family office, or getting involved in the development, at what stage do you typically like to come in? Is there more benefit if you sort of come in early on in order to avoid any mistakes, or is there more benefit for them? Is there a benefit if the family office had done some of the groundwork and kind of pass it on over to you?
We can work in either capacity. I mean, I think anyone worth their salt in development is going to tell you that earlier the better, because I think in the end, like I just kind of described a minute ago, there's a lot of times where families or groups are planning on one thing, and then, oops, it costs way more than I expected, or oops, we can't get that permitted here, and we shouldn't have spent the last 3 months or 4 months or 5 months designing this thing. So the earlier the better. Many times, we source property, we source acquisition opportunities, development opportunities ourselves. We have, professionals in Florida, New York, North Carolina, Texas, and in New England. So we have professionals out looking for properties off market and working on market with other brokers. So we can find deals and then work with family offices. And also, we also obviously work with other limited partners and investment funds. But we can also come in and say, hey, you guys have a piece of property, you're thinking about developing, you're thinking about selling it. What are our options? I think that's a helpful time to bring us in as well, because then we can sit down, look at what's feasible there, talk through the risk reward profile, kind of some of the different options here, and then make that help make that decision. Because I think ultimately, not everyone's meant to develop property, and not everyone has the interest in taking that risk on. I think there's many family offices, they just want to own a nice apartment building for cash flow, or a nice property for cash flow, which is a great option as well. So, but it just depends. And I think if you're looking for higher level of returns or opportunistic returns, 20, 25% plus, you have to put money to work in a riskier space. And then it's really all about how do you manage all that risk, right? And that to me is where the experience, where myself and my team, that's where we come in and we can really help out. And those are, so the answer is the earlier the better. We can show up, figure out the design, and build the thing if that's all there is, but I think, I've seen more I've been involved in projects where, a family office owns a large piece of property. They bring us in and it's already designed, not in terms of the building hasn't been necessarily designed, but the footprint's there, the concept, the program's there. And then it's kind of like, it's almost like they're trying to shoehorn in, okay, well, this doesn't totally work financially, but let's kind of figure it out. And then you spend many, many months and months trying to kind of figure out whether, when in reality, if we'd shown up, if we'd been brought in 6 months, a year before, when the permitting started, setting the program, we could have helped avoid some of those gymnastics we're trying to create and really improve the returns on the project. So that's where we can add a lot of value. And I think it's not just about executing construction and design. I mean, owner's project manager can do that very easily. But sourcing, the front end of deals, doing that analysis, and then figuring out the permits and approvals process, and what types of risks you're going to be involved there, who are the right attorneys to work with, because it's depending on the jurisdiction, but a lot of it is figuring out what's possible, right? And you can't really do that without the right attorneys, without the right engineering team, without that feedback, that kind of push and pull. But I really enjoy that. So I think I enjoy it, and our team enjoys it. So it's a fun thing. And like I said, we're very much meant to be in the space. So.
Yeah, for sure. Speaking of mitigating risk, you mentioned risk earlier. I'm going to ask you a question that I hope I get to stop asking, but it's a part of our reality. How did COVID impact you, if it did at all? And I'll give you an example. I know a couple of firms who just pumped the brakes on everything, and they said, hey, you know what? We're not going to raise a fund this year. We're not going to overbid on multifamily because it's the hottest asset class right now. How did COVID impact you guys?
Yeah, sure. We have a project in the Boston suburbs that is a mixed-use project. There's a retail component, and so our partner, who owns the family office that owns the property, we were looking to start construction at the end of March of last year. COVID arrived, and we put it on hold, and we're looking again to start construction maybe the next 3 months, and that's a great thing. But it was, clearly everyone had a lot of disruption and anxiety around kind of what was happening with COVID, and a real lack of clarity, right? And it's been interesting to see kind of what's happened with the market, but that was a disruption. It didn't like bring us to an end. We were also under construction on a multifamily project here in the Boston area. And so, there was a little bit of time a few weeks basically, which was very much to our benefit. Boston was shut down for more than, a month or two. But in the suburbs of Boston, we kept working, which was great. But it was that as well. I mean, it was scary. I think we were very concerned for our employees and our general contractors employees to make sure everyone was safe. So like everyone else, we went through figuring out what those protocols were or should be, work to keep everybody safe, but also continued on with the construction. So we delivered that project in July of last year. It's 90% leased.
Congratulations.
Yeah, thanks. So that's been
nice.
a nice success for us, and we're actively kind of moving towards our next thing. So.
Yeah, awesome. Let that be a testament of your experience. And you guys pulled through.
Yeah. It's been nice. I mean, it's certainly not just us. It's a great team of people. The property managers have done a great job, and we had a good construction team that did a nice job. We worked together and we solved some problems.
Right on. So you work with a lot of family offices. Some of them may have a little bit of experience when it comes to real estate investing, and some of them are just new to real estate investing. If for those investors, not just family offices, what would be a piece of advice that you could share with them that would save them a lot of time, but as well as money?
That's a great question. I would say, if you're looking to get into the real estate space, kind of the direct investment space, into the development space in real estate, understanding, assembling the right team is essential. It's crucial, right? And so, being able to recognize that, okay, you can find, you can develop over time relationships with other family offices that develop property. You can develop relationships with developers that just build and develop properties that will allow you to invest in their deals. And then you can also say to yourself, hey, I have property, I have enough property, I have an interest in enough in building out kind of my own real estate operation in some way. And that can easily be kind of a third party, which is really what Pugh Management does. A third party where you're not necessarily hiring somebody in-house as an asset manager, as a development manager, as a property manager, but you're partnering with somebody who has that experience, has those relationships, but you're not necessarily having to put them on your payroll. So I think that's a big piece that we can help with, right? So it's really, what's your approach? You've got to partner with other family offices that are already doing it, partner directly with developers. Both of those are going to involve a fair amount of fees, right? You're going to pay all types of acquisition fees. You're going to pay development fees. You're going to pay disposition fees. You're going to pay asset management fees. There's a lot of fees involved in both of those paths. And then there's hey, we're going to set up our own operation, or we're going to maybe have an in-house asset manager. Maybe, I know a group family office that owns a large portfolio of real estate here. They have an asset manager. They have property managers. They have a capital projects construction manager who really manages smaller projects for them, but they're looking to do development. They have large properties, interesting locations that they're looking to develop. So that's a potential partner that we would work with and say, okay, what can we do? What properties are you looking at and considering developing? We can systematically go through those with them and help them kind of figure out, okay, we have this project would be $100 million, tower, right? Office tower, multifamily tower. We have this project could be a $50 million, multifamily 3-story stick over podium, right? There's all these different kind of options and strategic paths that you can choose. And I think that's where, we can kind of help on the front end and help with some of those additional costs and fees. And that's where we typically, we partner with family offices. We will typically work with a family office either in the co-GP position or have family office as an LP, a limited partner. So we're flexible. It just kind of depends on how how the deal could be structured, and what makes sense for both parties. But many times some of these other routes, you're investing in a fund of funds or a REIT or whatever. There's just a ton of overhead that kind of goes into that, and for good reason, because there's a lot of work and effort and time. And if you're really looking for the opportunity to build some returns that are above market, really finding places to source kind of alpha, if you will, then you're gonna want to put money to work in private equity real estate, in direct real estate. So.
Yeah, absolutely. Now, if I probably asked you 5 years ago what your ultimate goal would be or is with Pugh Management and in the commercial real estate space, you would have probably given me an objective or a goal that that is where you are today. So what is your ultimate goal with Pugh Management and in the commercial real estate, I guess 5 or 10 years from now?
Yeah, our ultimate goal is to be the best in class operating partner for family offices that are interested in real estate investment. We have, we've got the tools, we've got the relationships. So that's where we're ultimately want to end up. 5 years ago, I said to myself, I want to be a real estate developer, right? And I wasn't sure what the right path was. And it's unfolded in such a way that I just happen to work with and know family office investors, and it's really worked out that way. So I love that about the space. I love the fact that I didn't mention it earlier, but my family has a family business. My partners, their families have family businesses. So there's an understanding, a relationship there that in terms of some of those dynamics around decision making and businesses. Family businesses are very specific entities, right? They're not necessarily public entities. There's a board and there's a decision-making process that we understand, not only because we work with family offices, but we have these kind of family entities and investment vehicles and whatever else. So we've had some of that experience. We've had some of those interactions that not necessarily everybody in the real estate space has had. So I think in that way, we're really a boutique firm that can understand certain things and make sure that we present things in a way that really speaks more directly to some of those families and some of those family members. So
yeah, well, I mean, you're already doing that. You've already gotten to that level, and I don't see any reason why you guys aren't going to experience a lot of growth in the next coming years. I wish I would have met you or somebody like you 5 years ago. Would have saved a lot of headaches for myself and the family. That's for sure. But hey, it's a lot of the family offices that are working with you. I know that they're in good hands, and you guys definitely know what you're doing. It's been a pleasure having you on the show, John. Thank you so much for your time. Tell everybody out there where they can find you.
Thanks, Gary. I've had a great time. Thanks for having me. You can go to pughmanagement.com, pughmgmt.com. You can find us on LinkedIn at Pugh Management, and then you can also send us an email if you want at info at pughmgmt.com. Okay,
great. I'm going to have those included in the show notes. Again, John, it was a blast having you on the show. Thank you for your time.
I had a lot of fun. Thanks, Gary.